Whole life insurance is the payday lender of the middle class. No. No, it's not. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. Our quote for today is going to be, whole life insurance is the payday lender of the middle class. That's going to be from Mr. Dave Ramsey. Let me preface by saying that Mr. Ramsey is an astute businessman. He is a well-renowned best-selling author. I do not mean that in any facetious manner whatsoever. He is obviously a family man and a hilarious fellow. Now, I would like to address this statement, though. The idea that whole life insurance is a payday lender. Now, why Dave says that is because often folks will call into his show and talk about cash value, whole life insurance, and how they've got it or are considering getting it and what have you. And again, I don't want to make any personal attacks or judgments on Mr. Dave Ramsey. He's done massive amounts of inspiring folks to better their situation, and I love that, and I'm all about that. But here we will talk about what we can learn, especially considering the infinite banking concept, because whole life insurance has been around for hundreds of years. Now, Dave Ramsey has done very well for himself as far as I can tell from the outside looking in, but I would like to point out that we are talking about an industry that's been around for centuries. Now, why the middle class, I think is, let me start on that part of the phrase. The middle class. Why the middle class? Well, because it could be presumed, in my mind, that the lower class, low income class, may not have the money for life insurance. Or Dave would presume that they may not have, because he will commonly tout that whole life insurance is going to be 20 times the cost of term insurance. Let's not tackle that just right away, but I'm saying that is mentioned with frequency. And perhaps it's only the middle class that can afford something like high cash value life insurance. Maybe that's the case, maybe that's not. What I would say is that what I endorse is the idea that you can become your own banker, that I can become my own banker. We would use a properly structured whole life policy with a mutual company that pays a dividend. So it would be a high cash value policy, yes, to be sure. And whether that appeals to low income, medium income, high income, I believe that would appeal to all as long as they are aware. You know, my philosophy is that when we know what's going on, we'll know what to do. Now, I've picked that up from reading R. Nelson Nash's book, Becoming Your Own Banker. When we know what's going on, we'll know what to do. So whether we're talking about low income, medium income, high income, I believe that evergreen principles simply apply to everyone where they're at. So that's all I'll say about middle class. Lender. Now, there's a great point there. Is it possible to access capital, to access money in a whole life insurance policy? Absolutely. Now, a couple of things here. Dave will talk about how there's virtually no cash value in a whole life policy for years. That's not necessarily so. I'm not saying it's not so, and I'm not saying that it isn't so. The structure of a policy is very, very important for the needs, wants, and desires of the owner. So could there be virtually no cash value in a whole life policy in the very beginning? Absolutely. Could there be a high cash value of a whole life policy in the very beginning? Immediately, in fact, and by immediately I mean, let's say within 30 days of a policy going in force, that there could be a high cash value that could be accessed by the owner of that private contract? Yes, certainly so. I know from experience, both as a consumer myself, let me state that quickly, because I know that many that would attempt to come to the defense of Mr. Anderson, and again, I'm not trying to put myself in opposition of him, but I am open to discussing the elements of this quote for the purposes of our channel and the idea that I'm promoting that you could become your own banker. So it's not a personal attack of any sort, but some would say, well, yeah, but you're a professional, Jesse. You're a salesperson. You're selling whole life policy. I started as a consumer myself. Just to say it quickly, I started as a consumer, practiced this idea for years of buying high cash value policies where I paid significant premiums as a consumer. And I used those policies for my own financing purposes for years before I became a professional and started mentoring, coaching, and teaching. So take that for what it's worth. I practice what I preach. I own multiple policies with multiple companies. I will continue to buy policies for absolutely as long as I can for my need for finance, and I would encourage you to do so as well when you know and understand how you can use those private entities with your ownership and your control for your need for finance. Now, lender. Okay, so virtually no cash value in the beginning could be the case. Definitely not necessarily the case. That cannot be a blanket statement. If it is, it's done so without the knowledge of how whole life insurance works. So I'm just suggesting, myself included, that we be open to learning, because a closed mind will learn nothing, but an open mind can learn something. Again, myself included. I'm not done learning. I've decided I will be a perpetual student during this life and no doubt in the next. So can you access cash value in a policy right away, immediately? Yes, you can. So he doesn't deny the fact that you could be lent money. Now, where we would need to point out a couple things is that you're not borrowing your own money. That's not true. When that is said, that is not true. When a life insurance company makes a loan to you, and again, we shouldn't pass over that it's in a known interest environment, which is fantastic. But a loan is made to us from the general account, the general funds of that life insurance company. Because our cash values in our policy that we privately own is only a net representation today of a future death benefit. So if we have a death benefit of X, today we would have a cash value, such as if we wanted to surrender that policy, which I would never endorse. But if we wanted to surrender a policy, we could do so because it has a cash value today that represents a future death benefit, which would be much, much greater. So, of course, the insurance company would be willing, and it's in the contract, that you could surrender a policy for a certain amount today. Now, that cash value, being the net representation today of a future death benefit, is going to be lent from the company's general fund account. So it's not your money. It's you taking a loan in a known interest environment from the company. And if you'll reference Nash's book, he had conventionally financed real estate at one point in his life and was caught paying 23% on a right at $500,000 in real estate deals that he had going on. But when he realized that he could access funds from the insurance company at 5%, doesn't take anything beyond third grade math to be able to realize that paying 5% is much better than paying more. Now, in a low interest environment like we're at now, folks would say, well, yeah, but Jesse, I could get, financing for 1%, 0%, 2%, what have you. Okay. Again, let's recognize that you can access a cash value in a perfectly collateralized entity, a perfectly collateralized asset, because you own it, you control it. And again, when you account for the banking function, you're going to realize that you'd be very happy to pay yourself interest when you realize just how profitable of a business that it is. So yes, folks want to own permanent life insurance for lots of different reasons, not the least of which should be that you could account for the banking function in your life. The payday lender, Mr. Ramsey says. I understand why he's saying that. I don't know whether it is knowing or unknowing. And not to say that he's not a smart man. He's obviously a smart man. Again, great businessman, best-selling author. All credit for all of his accomplishments. And yet, with logic and reason, it's possible to discern for yourself what the facts of life insurance are. You can have private ownership where you maintain control of premiums that you pay into an appreciating asset, wherein you can access capital with regularity immediately for your need for finance, whatever that may be. And here's another thought. Mr. Ramsey will commonly talk about how banks and insurance companies are the ones that have the skyscrapers, all the tall skyscrapers in a city. And instead of pointing to just the simple fact that consumers pay for everything, which is true, that is true. The consumer pays for everything, all the way down to the individuals who buy Mr. Ramsey's books. I've bought some of his books, read his material. So the consumer pays for everything. So if part of what I've paid in buying books from Mr. Ramsey, for example, has helped him build buildings or buy properties or fund his 401ks, if that's what he wants to do, fantastic. Yes, obviously, of course, the consumer pays for everything. My question is, will the pyramids still stand today? We could talk about how they got there, but they're still standing, aren't they? I'm just saying, it's worth noting. It's worth noting for more than one reason why things are the way that they are. Here we have an industry that's been around for hundreds of years that allows us to buy a product that is an appreciating access, that we have guaranteed growth, guaranteed access to capital, a death benefit, which is a tax-free transfer of wealth to our heirs or our beneficiaries, and lots of other aspects that would make it a desirable product. So I'm just saying, with further digging, this is a really engaging quote. And I hope that if something sticks out to you from what you've heard elsewhere or here, that you let me know what's sticking out to you, what your burning question or forethought is on this subject. So that when someone says that whole life insurance is the payday lender of the middle class, or says that, well, when you die, the company is going to keep the cash value and only pay you the death benefit, the face amount, they're just not seeing the facts of life insurance. A cash value only exists because it's a representation, a net representation today of the future death benefit. You know, when a home is sold, if you sell a home, you don't sell the home and earn a profit. Hopefully there's a profit there, of course, right? Earn a profit and also get the equity in the home. That's not how that works. You can either leverage the equity of the home, if you're allowed, on somebody else's terms and conditions while you maintain ownership of the home, or you sell the home and you get paid for the value of the home, including the equity is included in that, and only that. You don't get both. So it's just a misunderstanding. We all have room for growth, I believe. And if you have a quote that you believe that we can grow together by looking at on this channel, please let me know. And to carry out a conversation about how you could implement the infinite banking concept into your household, your business, or your investing, you can reach me at 828-817-4223. You can email durhamtalents@gmail.com. This has been a great pleasure for me. I look forward to our next conversation. Have a great day. Take care. Dave.